Hi, this is Chris Buss with Traders Profit Compass with a morning look at markets for Tuesday, September 15th. Okay, we had a lot of moving pieces yesterday. I've got a little note here on the events that were kind of driving yesterday's action. We had the TikTok news with Oracle. That partnership is still emerging with details to be filled in later. We had a lot of activity in the biospace. Gilead purchased IMMU for $21 billion. SGen, Seattle Genetics, got a $4 billion infusion from Merck. We had, in the semiconductor space, we had NVIDIA buying ARM Holdings for $40 billion from SoftBank. We had a Micron upgrade. We had Nikola getting in hot water, and an SEC investigation is supposedly being opened, and rumors that GM may back out of that deal. We've got Tesla Battery Day next week. Tesla was ripping yesterday and is off to a $20 start in the pre-market. And we had partnerships with DraftKings and Caesars with ESPN for integrating sports betting into the ESPN platforms, for broadening out that audience and giving people easy access to be able to do their sports betting and stuff in fantasy football with DraftKings and ESPN. So lots of stuff going on. I did look at futures this morning, and the risk-on sentiment seems to be carrying through today, at least in the pre-market, with some nice gains across the board. So let's look at the charts and see what we can find out together. You can see here that after the initial wave of selling, price has begun to carve out a trading range bounded by the 50 EMA on the low side and the 20 EMA on the top. Now today, if they can pop 342, which was the prior high, price is going to run into this channel line from below, and that would be a decision point of either recapturing the trend, which would be bullish, or a simple back test of the trend that gets rejected with price turning back down. So one of those two scenarios could play out today. We could either see another rejection at 242 or a breakout and a back test of this channel low, where that would be a really critical spot for either bears or bulls to step in and make something happen at the channel low. You can see it a lot better on the 30-minute chart. You can see yesterday we had the gap up, break above 338, made it up to the 340, 340.50 area, and then it kind of tailed off into the end of the day, but still managing to hold 338. Now today, I think that 338 level remains an important one. Any drop below 338, you're going to come back and test this gap at 337. And if you enter there, if price enters there, you've got $3 to the downside, and it would look like this breakout would have failed if that fell down into the low 330s again and lost this breakout level. Now on the upside, if the bulls can pop this prior high back at 342.50, then they've got something cooking with a series of higher lows, and then you'd have your first higher high here taking out this level, and then have room to go test 345, which was this high. And if they can pop that, then the door is open to 349. I doubt all that happens today, but what I'm saying is the bulls could reassert themselves here today with a move up above 342.50 and on closer to 345. Now, we are going to open with a gap this morning, it looks like. Just remember how we handle that. If it breaks below the opening range, they may come quickly back to 338 for a back test. And if you're not in, and even if you miss that gap fill move, buying 338, which was yesterday's close, is an objective long. So that would be your go, no-go level. If it comes back to 338 and holds, you've got a solid long try there for a run back up to 342, which would be a great trade. And if it drops below, you've got to quickly exit and either step aside or get positioned to be bearish for a potential fill of this gap down to 334. So those are the scenarios for SPY. Qs, same deal, carving out a trading range after the initial drop. Price squeezed between the 50 and the faster moving averages, the 8 and the 20. Still on a sell signal. Nothing has changed there on the daily chart. But if we were to break above this breakdown candle here, we would again set up a potential back test of this channel where either the bulls can pop it above or the bears can reject it and reassume the downtrend line. Here on the 30-minute chart, they gapped it higher, made a push to 277 where that rolled over, came back below this 275, and finally reclaimed it by the end of the day. I think that's your key level today, 275. The bulls need to hold that, and ultimately the bears need to break that to resume the downtrend line. So again, we'll have a gap open higher. Be prepared for that gap fill back to 275. That's an objective place to buy with a stop just below. You'd be looking for a run to 280 to 282. But if they can't do it, if they can't hold 275, then you've got to turn your eyes lower for a gap fill back down to the 50 EMA, which is at 270. Now, longer term, what the bulls need to do, first off, is to break this prior high right here at 282. Then they'd have a series of higher lows, and then they'd have a higher high after they fill this gap. So that would be an upside target objective for bulls to accomplish today or in the days ahead to keep this upswing intact. We've still got a bullish trend on RSI and PPO. So that's well within the realm of possibilities. IWM had the best day of all. Bounced off the 50, right up to the 20 where it was capped. We're still on a daily sell signal, but they held the line at the 50. And if we look at the 30-minute chart, where they gapped it higher and then took out 152, if you missed this open, if you weren't long already and you missed this move above the downtrend of this wedge, that was your first buy point at a break of 152 because that was recaptured from below. So then they pushed it up another $1, and in the pre-market, they're trading right around this 153.70. Now, if they pop that, you can stay long for a move to 155, where if they could break that, if the bulls could break this 155, then this whole breakdown would look fake because it would recapture this much bigger trading range up here between 155 and 158 to 160. So that's something to keep your eye on. Bears got to hold it below 155. Now if they reject it here, that's also an objective place to get short against this 154 level and see if they can bring it back down to 152, 151, and to fill this gap from yesterday. The thing that was really weird about yesterday was that several of the FAANG names had really, really poor price action. I mean, if we look at Facebook, off to the great, gap up start, came up here to 277 and just died in afternoon trade. Gave it all back to close red. I mean, that would have had to been really disappointing price action for, longs that, seeing the Qs up, seeing a lot of other names boldly green, and then to give that all back, that's got to be a warning sign or a troubling sign for the bulls. Now, how to trade this today? You're kind of in no man's land. I think if you can pop back above 270, that might be a place where you can get long and put a stop just below. Especially if there's a gap up, you can mark the low of the first candle and then see if it can pop this 273.20 and hold it. Then you can move up your stops and look for a move to 278. On the downside, probably going to be a tougher trade. I wouldn't want to get short unless the prior low was broken. And then, even there, you're only playing for a couple dollars because key support is at 260. I would, if I was bearish and I didn't want to play the long side, I would probably just let this go and see if 260 holds, which if the market stays constructive, I would assume it would. So the next level, if that were to break, would be 265. Apple at the end of the day did well, closing near the highs. It gapped up, basically treaded water all day, and closed near the highs. If they can keep that going today and pop 118, then I think they've really got some running room up to 123. If you're not in it, I think you got to wait until either 118 is popped or if it comes back to touch this. I don't have it drawn in here. To touch this opening gap from yesterday around 112, 113. That would be a nice long entry. And maybe this one stays strong up until its product launch event happens on Thursday. We'll just have to see. PPO rising, RSI rising. Those are bullish signs. Amazon was one of those ones also where you just got to scratch your head. Made a move up to 21.90, only to close red, giving back $100, and that's a big reversal. I mean, $200 in travel, 100 up and then 100 back down to close on the lows. I mean, that's crappy price action for sure. So now, if it loses this 3100 level, the target's going to be down here at 3052, and if that were to fail, 2975. So the bulls really got to get it in gear, recapture 3151, and then make a run to see if they can break this downtrend resistance and pop it up to 3200 and then take that out. If I were trading Amazon and the market was green and everything stays positive, I would be buying this 3151 and then gunning for a breakout of this wedge, and hopefully, it keep on going. You'd be able to set your stop just below and then see how far price can take you. On the downside, I mean, if it loses 3100, I don't know, I think you got 50 in it right off the bat, down to 3052, and then a place to move your stops would be on a break below 3052, and see if you can get another $75 out of it. But very poor price action there. Microsoft too, maybe it's because of TikTok, I don't know, but it came out of the gate strong, got up into this downtrend resistance, and then gave back half. So what the bulls need is a breakout from this falling wedge and make another push back up to 213 and see if they can pop that level, put in a higher high, and then make a run back up towards 220. I don't think you'll see a lot of downside today unless the market rolls over, but you've got this 204 and this 202 level, which are important. If you lose that prior low, then you're probably coming back into the mid 190s on the downside. So I think 204 is a good toggle point for any trades this morning. If you gap up, you can use the downtrend line as your stop if you want to get long. So Google, another poor one, came up here to 1560, rolled over, gave it all back, and closed red. So another failed move on the FAANG name. So three out of 5 weren't really looking so hot. So as far as trading it, 1505 has been a good line for us. As long as it can hold it, the bears or the bulls can stay long against that. Look for a move back up to 1538 and then 1567. But below that, then you're getting into this 1490, 1480, and 1460 levels. I would expect some choppy trading. You've got a lot of lateral resistance at fairly narrow increments, on the way down. So there's the potential for, mini bounces every, $10. So that might be a choppy trade. But it's got rising RSI and rising PPO. So the indicators are still constructive, but the price hasn't followed along. Netflix did not participate at all. It was only down a little bit, but it's still within this wedge. If the bulls can recapture this 485, they could get some upside momentum cooking to 495 and 505. But if they lose this 465, if you go look on the daily chart, there's a lot of air down below 465. That would be one where you'd want to have an alarm there on any downside break. If the market as a whole stays constructive, even if this comes to 465, I think it would hold. But if it doesn't, that is definitely a short that you want to be taking a close look at if the Qs roll over and the rest of the market comes back in. Netflix below 465 has a long way to fall, and I believe that support level doesn't come in until 420. Tesla had a great day. There are a few guys in the trading room that were trading it. I think it was up 40 something dollars. Anyhow, did not gap up, stayed close to the open, gave you a good entry against this low, the prior low, the channel line, and then it was just nonstop all day. And now this morning, I see it's up towards 430, 440. If that holds 440, then you've got a shot back up at the all-time highs. I didn't really see it coming. I thought a pop like that would be sold into. Wasn't the case. Perfect example of, having a narrative that price refutes, and you've got to respect it, got to adapt to it, and position for it. So if their battery event is not until next week, and if the market stays constructive, it may just go back up to the prior highs. I know a lot of calls were bought on it yesterday, looking for 450, 500 by Friday. Of course, that was, when price was down in here. Those will be a lot more expensive this morning, especially if the pre-market gains of, $20 hold. Those are going to be expensive this morning, but there was a lot of call buying supporting the move. Okay, let's look at some other names. We went long Nutrien yesterday. I really like the ag complex. I didn't like seeing this candle where, it had popped up and was flash and breakout with a bull cross, rising trend on PPO, and rising RSI. Didn't like that a bit, but as long as it holds right in here, I think there's a good chance for this to move higher towards 44 in the weeks ahead if the ag complex stays strong. And one thing I like about the ag complex, it doesn't have anything to do with Facebook or Amazon. It's a commodity complex. The commodities have been doing great, and I want to figure out a way to participate in that without, full-on chasing. And this looked like a nice setup with which to, give it a shot, because this will trade with commodities, and I think you'll get, regardless of what happens in the market at large, I think this will trade mostly to the beat of its own drummer and with the ag commodities. IBB had a big day. with the Seattle genetics and the Gilead news. So we had talked about this downtrend channel just the day before, over the weekend, and now it has popped that channel and is right here at lateral resistance at 135. If the bulls can pop that and hold above and not just give it all back, I think you got yourself a long there. Certainly objective place to get long against, all this support down below with a chance for a run back to 146 in the prior high. So if you're interested in IBB as a long, I think you've got the setup for it with a break of 135. I think you can get long against that. Look for a move towards the old highs with a stop just below. DraftKings got the big spike on the ESPN news. I think you got to wait right here and be patient, not to, just buy it here. I anticipate there'll be at least some profit taking in the days ahead. It would be great to get a half back, 50% move back, get something towards 46 or even a back touch of the breakout at 43. That might be asking for a whole lot, but I think even a half back entry at 46 would be a good place to take a shot at that. Kicking myself, we were in this for a few days. Really volatile action in here. That doesn't look like a lot, but going from 40 to 36, that's a lot. And I think that goes, knowing your stock helps a lot. And I wasn't prepared for that volatility. Seeing an option cut in half in just a day, that I got scared out. So, lesson learned. So let's look for a pullback and see if we get it. Restaurants are looking good again. DRI is right here on the threshold of a breakout. We do need to check when earnings are for this. But I think a breakout here, and you've got room to run to 105 with this price void right here. There's not a lot in the way. And it's been consolidating for the last couple of weeks right at this level. If we can, get a confirmed breakout there, I like that trade. One group to stay away from within restaurants is the pizza guys and the wing guys. Those names, Domino's, Papa John's, Wingstop, they're all selling off. These were early beneficiaries of COVID. Now that COVID's kind of normalizing, the pizza and the wings are cooling off. So focus on your other names. Starbucks, McDonald's, Dunkin' Donuts, Eat, the Brinker, DRI, Dine Equity. Those are all shaping up. Texas Roadhouse is another one. So look in that sector, but stay away from the pizza and wing guys. And then I'll leave you with this one today. NIO, the electric car Chinese electric car maker, has broken out of this consolidation triangle, popped it yesterday, price above all the moving averages, which is bullish. Seeing order flow out into October for October 21 and 22 calls. Simply looking for a move back up to the prior highs. So I think clearing this resistance yesterday was important. I think that's a nice setup for a long. Be prepared for a little volatility, you can see. And keep half an eye on Tesla. They generally trade together. Obviously, the magnitude is different for each one. But a simple move back up to 22 from 19 is a healthy move, and that could be a great trade if you were to capture that and price cooperates. Okay, let's wrap it up with a few thoughts. Daily time frames on the indexes, nothing has changed. All three are still on a sell signal, and they're building trading ranges. If we were to look at futures right now, they're green, so the bulls are looking to build on the gains of yesterday. If they're able to do that, they may have something cooking as far as a durable rally goes. Stay on your toes at the key resistance points, which were the prior highs of last week, and see if the bulls are either able to take that out and build on their gains, or if the bears reject them at that location. And then the next test will be back tests of the uptrend line. And then if the bulls are able to capture that, then the dipsters will have prevailed once again with a recapture of the trend. So that all remains to be seen. I still think we're at a transition time now in terms of positioning. As you know, we're pretty light on positions, waiting to see how this resolves, not willing to pile in long, not willing to pile in short. We need to see how the next few days plays out. By all means, intraday, if you're an active, nimble trader, take advantage of those levels, both bullish and bearish, according to the price action. Don't lock into a narrative. Just go with the flow. When levels are captured from below, it's bullish. When levels are lost from above, it's bearish. And if you keep that in mind, 9 times out of 10, you'll be on the right side of the trade. So I hope you found the content helpful. If you did, please hit the like button and subscribe. And I want to thank you guys for getting me over 100 subs on YouTube. I'm looking forward to keeping that going. But thank you so much for subscribing and spending time with me. I hope you find the content helpful. For those of you that are new, jump over to the show notes and subscribe to the content. Visit our blog. You'll get access to our trading room. We had 2 or 3 new members yesterday. So glad to see them jump in and participate with the group, coming up with a lot of fresh ideas and capturing things real time during the day. So hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you.